Hello guys, welcome into our channel. So as promised from our previous video, I'll be explaining the concept of supply and demand. Remember, as traders, we are not alone in trading. There are big institutions, the banks, the companies, those people that move the market greatly. So you should also understand how those big institutions trigger the market. So let me illustrate briefly on how does this concept of supply and demand is similar in their way of trading. Let's say the market moves like this and also like this and like this. So we say the market. So here the price will move. We get the impulse, then starts to consolidate here. For instance, in this area, the price will relax and then move again. This place, we say the price, it consolidates or it rallies. We say when the price does this exactly, we say that the price. So this will go up and then consolidate, then go up again. Then we say this is a rally where the price consolidate and continue. Then there is another instance whereby you will find out that the price has been going up and consolidate, then go down. So you see these two levels, this first consolidation area and this other consolidation area. We say here there is the demand, it's a zone, and this one is a supply zone where the price has consolidated, and then after that there is a movement in the market. Okay, so once you're able to identify these moves in the market, you are good to go, because the price comes here, then consolidate for longer and then continue. Then here we say this is a reversal market where there will be a change of the character. Here there will be a break of structure when the market goes higher a bit. Okay, so this is how we get to the zones. So the zone, like I said earlier, it's not just one line like the support and the resistance. The zone is not a line like this. See here, it's a resistance, this one is a support, but a zone is just a bigger area where we get the clear picture of what is happening in the market for an ease. So this is a zone. Let me draw it for you. This is a zone here. This is a zone where the market was consolidating. So we will be able to open our trade and set our stop loss above the zone, and then we sell. Here at the bottom, we will be able to, if let's say the market didn't move, we will be able to draw our zone here. Let's make it a bit accurate. You see, let's make a bit. Okay, let's bring it down a bit. Let's bring it down a bit. Okay, Okay, let's bring it down a bit. You see, here, this is our supply zone. And if we had the chance, we will be buying here, setting our stop loss below this area, because we have identified that the market, after the impulse, the corrective waves has been here for some time, then we can buy and set our stop loss and hold, then boom, the price moves higher. Okay, so that is what we call the supply and demand, the market. Okay, you remember that I said that the price, when the price is low, like here, then people, they buy a lot. Let's say the people want to buy euros with dollars, but at this price you find that it is cheaper. They want to buy 50 billion, they want to buy 50 billion euros with dollars. The bank will then look that the market has been consolidating here. Then they will buy, at least they will spend only 30 billion dollars to buy euros, and you find that the market will suddenly decrease we increase the price to decrease the demand. And after the price has increased, the market will then consolidate again here. And remember, the market will come back to where the banks have bought previously, and then the bank will then add their 20 billion to buy, because it's cheaper for them here. They need 50 billions. Okay, then the market will also rise again. So what guides the market, it's the demand and supply. So here the supply was too much, such that they were able to buy, and as soon as they buy, the supply, it decreased. It decreased by increasing the price. That's why they couldn't buy 30 billion at this consolidation area, because for the market to move, this is controlled by who is buying more and who is selling more. Okay, so for you to understand these demand and supply zones, these two, you need to understand them, because this is they help us not to trade just at no man's land, but we do trade according to what the market movers are saying and what the market movers, they are doing. So firstly, once you understand the demand and the supply, you will always be able to follow the trend, and you'll be always be able to see the sniper entries. Okay, so remember, the market works with time frames from 1 hour, 4 hour. Like you can see on the screen, there is M1, M15, M5, M30, H1, that is H is an hour, then daily, weekly, monthly. It's the time frame that the market takes to form one single candle from manufacturing and until that candle is finished. So in this case, we use the bigger time frame to analyze, where we identify the support, resistance, the zones, the demand and supply zones, and we draw our order blocks where we will be looking for an entry in the smaller time frame, because we need to see the candlesticks that are small when the market is really making a move, so that you can get the private school entries in the market. Okay, I hope you get it. So this concept, where the banks will identify when the price is at their cheapest price, and they buy, and when the price is now good for them to sell and make money, these areas, they remain there forever, because the banks will always move, yes, to they will always move the market and fill their gaps where they sell and they buy. For instance, here we see that we see that there is this zone, but now this zone, we see that there is this zone here. Yes, but in this case, there is the break of structure here. It means that there is this zone here where the market has respected the price. Okay, there is this zone here where the market respected the price. Actually, there is an order block here. You see, after the break of structure, there is this order block and it is valid. So when the price is high there, we already know, the banks already knew that they will have to sell, and then after they test the order block and the price will buy again, because this is the consolidation area where they bought last time and caused the market to move high. So this thing, it repeats itself as the market moves over time. That's what we use to study. We call it the history of the market. So as we are trading, it is very important to identify these areas. Don't just buy anyhow, sell anyhow. See and know that now the market is forming these levels, it is forming these zones. Then I can buy, then I can sell. Okay, once you understand that, you are good to go in the market. Okay, so your job as a trader, you need to find these zones and these levels. Okay, you do not need a robot, you don't need some lot of indicators, but if you can be able to identify these levels with your own eyes, you will be able to trade and make most amount of money in the market. Okay, please write in the comments section, below, if you were able to find these levels, so that I can also assist you how to find these levels. There is also our free WhatsApp channel where we drop signals and we share some knowledge, where you have some questions about trading in the market. So see our description in the description video below. Check there. If you don't have an account with Tarif, you can use our link to open your free demo account. We have a lot of learning materials awaiting for you, so that you can be a profitable trader in the market. And also there is a link in this description below where you can join our channel and follow the channel. Click the notification bell, so that when we are dropping an educational information, you will be the first one to know, and you will be able to make the most amount of money. So okay, thank you so much for watching this video. I have an assignment for you. Please go and practice, use different time frames to identify these levels, but it is best that you use the bigger time frames. Okay, even if you can go to, let's say it's crash 1000, there is this thing we were talking about here. You see here, the price has been consolidating up here, and then boom, it went down, then also a bit, then went down, and also consolidate and went up, then down, then consolidate, went up, consolidate, then down. The price will not just shoot and move without consolidating. So if you were able to identify when the price is, after the price is consolidated, you will target the low moves, and it will consolidate here, the up moves, consolidate here, the up moves, the down moves. That's how the price goes always. So make sure you identify these levels, so that you can make the most amount of money. You don't just, because it's crash, it doesn't spike downwards and all the time, but instead it respects these consolidation areas where the institutions, they buy and they sell all the time. Make sure you are able to identify this, then write in the comment section below and like this video so that we can be able to upload more valuable content to you. Thank you so much for watching. Bye bye.